account for daylight savings, so I actually lost an hour. Yeah, Google's shit like that.
Okay, okay, we're shorting Google right when we're done with Verizon.
Verizon.
We are live, guys.
We're live.
Yeah.
So say goodbye to Blunts.
See you guys. Let's do another one. Yeah, I'll catch you next time.
We'll catch up another time.
Sounds good. Take it easy. Bye.
Cheers.
Later. All right. How's the quality?
Quality should be
I mean,
fine.
everybody sounds great.
Yeah.
Yeah. Slight change of personnel.
Yeah.
We're ready.
What a bummer. Anyway. Third time's the charm. That's right.
Okay.
All right, so are we ready to do this or what? We gonna do
We're
this?
ready. Let's go. So we're welcoming a couple of people that you haven't heard in our streams before. Crypto Mikey, Spacmikey, back to Crypto Mikey. Hey, what's up?
We're staying with Spacs. Yeah.
We're staying with Spacs.
Yeah.
I like it.
Equity price action today gave me that.
Hey, you gotta buy the dip, huh?
Mm-hmm.
And Idrawcharts in the house. Hello, man. What's up?
Well, y'all made the mistake of inviting me, so here we are.
Yeah, we were
Here we
all good
are.
until that happened.
Not pretty much.
I blame Dave.
Nah, thanks for
Never
having me, guys.
has.
I appreciate it.
No, thanks for joining. Like, these are open. Like, I always throw these out. Like, I don't, I'm not like a douche, Like, if you guys are like in crypto and you want to talk, like, that's like what this is. It's like a chill conversation. So some people act like they're too cool and shit, but, it is what it is. So we appreciate you coming and chilling with the homies.
Oh, yeah. Yeah, this place is actually full of some of the people that I've quote unquote known the longest in crypto. Mikey here was the one that got me on Twitter, so
Yeah, was it 2017 or 2018?
I think 2018. But well, that's when I started posting. That's when I made this account or my the Twitter account that everybody knows, not like the old personal one I was using.
The great bear market. You were the only one that was profitable in 2018 that I know.
Yeah. That was when you made your portfolio, right, during the bear market.
Yeah, pretty much. I played the bull market like shit, so I had to make up for it, man.
That's a rare skill though. So props.
Crazy.
Mad props.
Yeah.
What do you just flip the chart upside down on TradingView and it's the same thing?
Actually, I just stand on my head and it all makes sense.
There you go. Like that.
The old one.
But you are like you've been in like buy the dip mode since forever, right? All right.
Me? Yeah, I've been buying since I flipped Uber Bull at like 8K, and the last time that happened was at 4K. The first time since 2017. So I don't know. Sometimes it's just fucking go time, man.
Indeed. So we're not done with the introductions though. We got Xavi in the house. We did this before, but the technical issues. We will do it again. Xavi, say hi to the stream.
Everyone. People were saying they want more Xavi and less buffering.
More Xavi, I saw that. More Xavi, less buffering. I think we can give them that. And then we got Chris Swingularities.
Hey guys.
Yeah.
And of course, Korean Jew Jake,
The host.
who is annoyed by his internet connection and wants to burn Verizon down. But
wait,
we'll do that.
wasn't he about to rebrand
some other day?
Wait, wasn't Jake about to rebrand to the Big Schnoz or something like that? Didn't I see that the other day?
That was me being a troll. I was just being a troll. I thought of the worst name possible because, like, that's like the guys who get the most like views right now are like the moon, like that's his name, the moon. Like I don't know him, but I'm just like looking at like who's getting views. Bit boy, like okay, like maybe my name sucks and I need a better one. Because
No, we're back to 2017. Remember when we got in this? It was the most annoying people in the world, and they got over 100,000 subscribers on YouTube, and we're kind of back in that phase. I think. Keep doing what you're doing. Don't be like them. You don't want to be like them.
Nah, I'm not really trying to be like them. The content that we provide, I don't think it would resonate with like that crowd anyway. You know, those people just enjoy being told what they want to hear, and you know, here we keep it real. So, you know, if you're giving,
it's not always fun.
no, yeah, they don't. They just want to be told what to do and what to hear, and we do kind of tell them what to do, but you know, I don't know. I'm happy.
More like a subtle psyops kind of, you know.
Yeah. So who's the gather ape? Look at this fucking candle. Jesus Christ. Did you see that?
Is it pumping?
Like,
I haven't
dude,
looked at the
it's
charts.
ridiculous. It's ridiculous. No, well,
Unbelievable.
now
Yeah.
it's like now people are like they're like selling the retrace, but like if you look, there's like one wallet. This guy like he just like kept firing off 50
Oh, wow.
buys, like
Oh,
all the
well,
way.
yeah. I mean, it looked super ready today. Like that pennant above the breakout. That was just beauty.
Yeah, like this guy was just firing off like multiple 50F buys all the way up to 50. 50 cents.
Someone share your screen so that so we got something for people to look at.
Yeah,
that
that would
makes
be good.
sense.
I mean,
Wait,
we're talking chart patterns stuff.
So is Chris like up 35x on this? Oh my.
Like compounding, I think a lot more.
Oh my.
Yeah. Like any gather holders who were wondering who was keeping that thing down in the accumulation range, say hi to Chris.
Chris, they say the volume is very low, by the way. Yeah, Chris was like market making gather for a very long time. But the volume is low, and you still have Discord screen. I think you to make it higher, you might have to adjust it in Streamlabs.
Yeah,
or OBS.
I actually increased the master.
Yeah, do it in. Yeah, you do it in there.
Chris, do you wanna bring up a couple charts, maybe? Start us off.
Actually, I definitely don't. I'm juggling a hell of a lot right now, so I'm
not
gonna be.
so easy being me, huh?
Yeah. Well,
Zavi, do you want to go?
I'll show some charts.
Awesome.
Oof.
And I think Mikey has a couple of topics prepared actually, so he could also go. I know that he wanted to talk about the DXY. He wanted to talk about rates, which is very much in line of what like Arthur Hayes, wrote about today, which was a fascinating article. Like I was actually like grateful to be able to read that.
Yeah, really well written.
I can share some stuff. I just need to know how to hide my bookmarks on Chrome so I don't dox myself.
That'll be definitely very, very prudent.
yeah, I can actually hide the top part of it. Give me a second.
Yeah, you can do it in OBS, right?
Yeah.
Damn, somebody fucking modded my comment in chat. What? Who did that?
Rude.
They deleted my message. What is
Might have been by accident.
Yeah, I was flaming a guy. Like, yo, if you don't like it, just go away. Just go fucking away. I want less watchers.
Like maybe YouTube has like a filter for that.
I'm already. Yeah, I called him a cunt, and
Okay, I've got the mask on the top to hide the bookmarks.
Awesome. So Mikey, you wanna share screen here in the lounge, and
Yeah, let me see if I can figure out how to do that.
it's just like below the left bar where you got the lounge and the participants. there is the voice connected and that there's like screen.
Oh, he
big
still
button.
has the issue that he's going to be doxing himself inside the lounge, though.
Who?
No. I changed his nickname.
All right. Also, if you do F11 to maximize the screen, you don't see the tabs anymore.
True.
Yeah. You guys are shy and stingy with your likes.
Hey, I just saw the new what is this, third stream link or whatever? I don't even know. It's
Yeah.
Who cares?
Yeah,
I don't care anymore. I don't care. I'm over it. Let's just talk. The fuck? What's BTC gonna do?
don't tempt me. You won't be able to get me to shut up. Jesus.
Somebody talk.
Yeah. Mikey is busy. Like, did you figure out how to share the screen in Discord?
Yeah,
Mikey's a
apologies for that.
boomer. That dude's
I'm
like in his
No
30s.
issue, no rush.
I'm not gonna be able to because my headset is set to my iPhone. They're AirPods, and I can't set my AirPods to my PC.
All right,
So,
hey, I'll
just
share charts because mine have a pretty background, and you guys just tell me what you want me to pull up.
Sounds good. Go for it whenever you're ready.
Awesome. Also, like, drop
save you.
some of your alpha here and there.
Oh,
Yeah, if you can make a switcher, great.
dude, my alpha is literally just thinking about a million things at the same time, and sometimes there's like patterns and shit in it, and I don't even know if half of what makes me money is stuff I can teach people.
Charts, I'm gonna swap to another headset, but why don't you cover crypto? Because I wanted to go over more equities, put the call ratio, the dollar, and that. But go ahead and walk them through where your thoughts are with Bitcoin and alts and that.
Oh.
The pressure.
All right, here
So-
we go. Sharing screen.
Don't worry, I will tell my kids you were Benjamin Blunt.
Oi, wait.
Yeah,
I see
okay.
it.
We see you great.
The part is that I need to change off of push to talk because otherwise I'm just going to be spamming T in the chart while I have it up. So, but I might not be able to talk then. I don't know what the settings are here.
Oh, that's all right.
We've never had that problem before. Oi, I'm Benjamin Blunt.
This room might be mandatory push to talk.
I'll
Think
check,
so?
but I don't think so.
All right, I just
No,
changed it so it's alt, so it's mandatory push to talk, but it should work now. So
All good.
can you guys hear me? You guys?
We can hear you fine
Yeah.
and see you fine. Yep.
All right, cool. So this is a random ass Bitcoin chart on FTX Perp. I literally use like all the different Bitcoin charts available to draw different shit on, so they all look different. But this is what's up right now.
Do you trade mostly on FTX, or what's your
Of
favorite?
course not. Of course not. I'm an American citizen.
Yeah.
Of course.
None of us.
It's impossible.
Plus, I trade with $3. I trade with $3.50. So who cares anyway?
Yeah.
It's but yeah. So I mean, basically, like this is. I mean, so basically, my thoughts on the market. I haven't even really been looking at Bitcoin much for like a while because I'm a swing trader, right? Which means I don't need to be staring at the chart and seeing like, oh, what's it doing on this little 4-hour candle? I don't give a fuck. Who cares? Like I've been holding it since like down here, and like, no shit, actually lower than that shit, like down here. I don't care what it's doing, on the 4-hour chart up here. So I don't really have a whole lot of thoughts on Bitcoin right now. My kind of thesis and idea of what we're going to be doing right now. Some of you may have seen like my mega thread that I've been updating every couple months on sort of the general crypto cycle. I think we really are mirroring the 2016-2017 cycle, and I think we're pretty much chronologically in like the mirror of the first half of 2017, right? So I'm not saying like take it as a fractal and compare exactly how this price action is going to go, because obviously history rhymes, it doesn't repeat. But my thought is basically like, what was that time period? Because I'm comparing it to the halving, which is a supply shock event, right? So what was this time period following the supply shock event? What did it look like? What were the characteristics of it? And what it was it was highly volatile. It was, the market went through several little mania phases, which I would characterize, this run from like 10K to 40K. That's a mania phase, right? And then we had a cool off period where it's still highly volatile. We're bouncing around, but nothing really exciting on a macro scale is happening in here, right? We're just kind of renormalizing stuff like funding, stuff like basis on the futures. And we're giving the over-leveraged participants a chance to go fuck themselves, basically, which is you have to do,
right?
To keep
it's working.
the market to be healthy, right? Exactly. And I think we kind of saw another run up, right? And a lot of this was news driven. We had the Tesla buy in here, but I still consider us to be kind of in that stage where we're basically, the market went up really fast and got ahead of itself. Right, where a lot of this run was hype and speculation, as opposed to people that want to buy and hold and act. And this move right here doesn't quite yet reflect the long-term balance of supply and demand. I don't think. Now, I think that obviously that this little run was kind of based on the idea that yes, there's a massive amount of demand beginning to enter the market that's not met by supply. But this run up was primarily caused by people speculating on that, not by the actual imbalance. Now that imbalance has to catch up. And that's what we're kind of seeing here is we're kind of floating around doing nothing particularly exciting. I know like a lot of you guys are going, oh my God, 30K to 60K. Like look at the range on that. It's like, but that's not really how I think about it, right? Yeah, it's a huge range on a hugely volatile asset. If you were looking at price action like this on something like the S&P 500, this would be like what, 2-3% maybe? Just because we're comparing the volatility levels. This isn't a huge, nothing major is actually happening here. We're kind of just returning to the norm, to the mean.
I think
of the supply shock.
David, I think you're making a good point about the speculation on the supply shock and the supply shock actually not really taking full effect yet, because we see these like giant buys, like we get to know about them either after the fact or through like Glassnode on-chain analysis, and they happen in those like corrections and reaccumulation ranges, and they don't really put a dent on the chart, right? Like the price went up after Tesla announced. The price didn't went up because Tesla bought. So I think that distinction is really, really helpful.
Exactly. So I try to view the market. I mean, if you guys have been following me or have known me for a while, which a lot of you have, that I trade mostly off supply demand, but I try to look at a lot more than just, obviously I have like this little box drawn here because that's what most people think of when they think supply and demand. I think these supply demand zones, EQs, ranges, all this shit. I think about it differently because I'm a swing trader. I'm looking at how long can a sustained imbalance last and what is causing that? What am I looking at to see that balance shift? I don't necessarily care what the price action is doing directly as much as I care about the underlying sort of ratio. As long as there are more people buying at a faster rate than we are having emission, whether that emission be from the block rewards being sold or from old holders cashing out or whatever that happens to be, as long as there's consistently sustained greater interest, eventually the market's just gonna go up. It's gonna trend up. And yeah, we're going to have, a whale decides, hey, I'm going to dump 5,000 Bitcoin. And yeah, we're going to see that affect the market. The market's going to drop. I don't care. That's all intraday shit. That's noise. That's just little fluctuation. It doesn't change the larger picture. And it's that big picture that I'm trying to keep an eye on and I'm trying to focus on, not, that's a lot of why you guys don't see me post so many charts anymore, even though it's my fucking username, is because the chart is almost an after the fact. It's also an after the fact reflection, not actually what's driving price moves, right? Maybe on more illiquid assets or smaller timescales where it's sort of a mass psychology thing. But realistically, the chart's not what drives price. So
you're gonna change your name to Idrawcharts Seldomly?
I mean, let's be honest, my handle's pretty fucking great. I'm not giving that up anytime soon.
Okay. Yeah, well, it's a very good point. And I mean, one thing we can observe is that the mean reversion happens differently than 2017, right? Like personally, like when we were running up to 20K and then past that, I was one of the people that were expecting a mean reversion to that 21 EMA on the weekly that got hit several times in 2017 and in past bull markets too, I think. And that didn't happen yet, like at all, right? I think at the moment it's at around 30K. Yeah, you can
For some
bring it
reason,
up.
it's not opening the settings here. I'm trying to, but it's not letting me pull up settings for this. It's like a bug that happens sometimes. I don't know why.
I could.
All right. Well, just
I
imagine
could,
like this, but following price less closely.
I could take over real quick and share my screen if
Go for it,
Chris
man.
Chris
I'll
can
have it.
switch. Chris, you can tell me when you switched over.
Yeah, right away. It's good.
So that's this like epic weekly, like almost a year-long divergence on LTC. I'm not sure if it will ever break up, but I'm in a trade at the moment. I'll just bring this up real quick. So
You're on the gather chart right now, right?
Yeah, right now we're seeing gather.
now you're seeing gather like at the like. If there isn't like a weird lag, you should see Bitcoin now.
No, it's gather.
Gather.
Oh, I
There's a
see,
good
I
lag
see.
on these. It's
I
No,
see,
I'm not
no,
looking
no,
at YouTube. I'm looking at Discord right now.
I'm in I'm
Oh.
in the wrong app basically.
all right.
That's all right.
Yeah, I had to check that
Now-
because I actually had a wallet open. So I had to like double and triple check which window I was going to share.
Yeah, you're good now, Solomon.
So let me get on Bitcoin real quick. This looks kind of confusing, but the important line is this. That's the EMA, and in the past, and on the BLX chart, it looks a little bit different because the price history is longer, but it's close enough here. And here you can see how in 2017 we got all those very, very clean retests. And then eventually, as the trajectory of the bull market becomes steeper and steeper, it stops doing the retests, right? Like that's basically it. November, that's like the second SegWit and the Bcash Dragon Slayer event FUD right here. And even that,
Dude,
doesn't
that was a
manage
fun week to
bring
trade that
it
I was
down.
so unprepared for at the time. Like
That was wild. Like that whole phase from China FUD to there, where you had like the Bcash fork happening, and people speculating. Like the fear was real for a couple of weeks that it would actually dethrone Bitcoin, right? Like, and then you were like, and if you were somebody who just sold the forked coins on Bcash, you were thinking like, shit, do I need to buy them back at 6x now because Bitcoin is dying and this is the future, something like that. It was especially to I'm sure that like OGs absolutely knew what they were doing like in that scenario. But if you entered crypto in 2017, I think very, very few people were able to read that correctly and play that confidently.
Oh, I sure as hell was
So-
not. Like I came from legacy markets, and that was still relatively early from when I made the switch to trading crypto full time over equities. So like I had plenty of trading experience, but first I hadn't really experienced a parabolic trend before or tried to ride one. And so it was like, not only is it a whole new market about tech that I really didn't understand very well at the time. Like I remember like the day of the Bitcoin Cash split, I was Googling what a fork was. Like the, like, you know, like I didn't know shit about crypto itself. I knew a decent amount about trading, but like, dude, 2017 it was something else, man. Like, and I think this year, in a lot of ways, it's been the same. Not for any of us probably talking here because we've all kind of seen it before now, but for new people, man, it's bull markets are fucking hard, dude. They can be, especially if you don't really have any previous experience with them.
They really can be, yeah, and they put a different kind of stress onto your system, right? You have, if you don't have a very, very strict regimen and are very disciplined, then eventually you will tire out. and that might warp the way you perceive market movement. That might cause you to zoom in too closely. I think you made a good point there about like low time frame noise. I mean, if you are a scalper and you like to range trade and all of that, obviously that's where you thrive. But if you are, and I think the majority of like smaller portfolios in crypto are on that long hold game and trying to get out in time when it's time, then it's really, really dangerous to get sucked into that price action, because it will trigger all kind of emotions.
Oh, for sure. I mean, I think the best advice I can give anybody that's like still relatively new is don't ever close out a trade based on a different time frame chart than the one you opened it on, like ever.
Oh yeah, that's a good one.
You know, if you open it on the 5-minute chart, don't close it because of the weekly, and don't target weekly levels. Just trying to turn a scalp into a home run. If you open it on the weekly, don't close it based on the fucking 5-minute, and you're just going to cuck yourself out of like all potential opportunity.
Yeah, I'm sure that a lot of people can relate to that one, right? Like you catch a scalp, like let's not be as extreme, like on the 15-minute, and then it starts to look bullish, and the consolidation, like the chop has been going on for a while, and then you get that fantasy of, oh, what if this is the one, right? And then you don't take profit, and you end up stopping out break even, something like that. That's not how you grow an account.
Nope. It's let winners ride is great advice for swing traders.
Yeah, you really need to know like what kind of trader you are, or what environment you are in. Like if you have a varied tool set, then it's important to identify the environment you're in and switch those strategies up, basically. Sabi, sorry, you were saying something.
I was just saying I felt targeted.
You felt targeted? I mean, I've been there too.
I've been there.
Yeah, same.
This $14 BNB long for all-time high that I closed $2 later, because of a 5-minute chart.
Yep, I think we've all had those. Or trying to do the converse where we let like a 3 or 4 hour scalp turn into just a loss for no fucking reason, because we're like, oh, but the daily might be breaking out, and then it's just a fucking wick or something.
Yeah, same.
Yeah, so I got that in pretty much the same box that I think mine's a little bit wider, but the same box that David had on his chart. It's relatively obvious. And Blunt's unfortunately had to go because we took a bit too long to start, and we had some like time zone issues. But Blunt's he posted an update to his Bitcoin chart, which kind of looked like this, I think. And then basically up to that bull trap, and then it kicks everybody out like to somewhere down here. And Jake actually had a scenario where it could end up going even lower, and that would finally give us like the first 21 EMA weekly retest. I think your level was at like 34-ish, right, Jake? Like I know that you weren't banking on it, but you presented that scenario.
I got it here. It was 32 128.
32. That would actually be most likely when it happens, we'll most likely exactly hit that EMA, which could be nice confluence. I'm not sure. And personally, I was still at least waiting for this to load up with like more of my stables that I exited higher. And I also took a bite in here, and I started that LTC trade because the Bitcoin chart for it just looked so good. Basically because of this, and I know it's kind of a meme, but Grayscale, like Pentoshi pointed out how Grayscale has been buying a ton of LTC. Like they bought up like 80% of the miner distribution for a couple of weeks now, and there are a couple of FA catalysts coming up too. Like Mimblewimble is supposed to launch, I think, around mid-March. Then you have that Flare, like this interoperability chain that's supposed to bring smart contracts to XRP and LTC. You got that stuff going on where you would have like basically kind of like liquidity pool rewards where you could find use for your otherwise yieldless LTC, mostly yieldless, I gotta say. I think that's a wrapped LTC form, but it's not obviously not very much used in DeFi. And lastly, I had that idea of the whole Dogecoin pump. Like who are the players that profit the most from that? It's most likely the large LTC miners because they've been merge mining Dogecoin for years. So they definitely got some nice adds to their war chests recently. So they could actually, if they want to push their main asset, they could actually give it as like a little shove in the right direction. That's very speculative of me, like to think like that, but I think it could play a role eventually. Like that, I know that the largest wallet didn't even take profit yet on Doge. That has like 29% of the supply, but I'm pretty sure that that's like some LTC mining pool or miner. Like if you look at the block explorer, you can also see how these transactions come in, and they pretty much look like minor rewards, or at least like smaller distributions in phases. So yeah, that's this epic weekly bullish divergence right here from May 2020 till now. Like that's 10 months. That's like something I wouldn't ignore. Obviously here the MH10 finder still looks like shit. A lot of stuff doesn't look that great, but yeah.
You think what's LTCF look like? Like if you had to pick for like somebody new watching now. And by the way, the stream is so much better when I don't talk. You know, we should do this more often. But I'm enjoying this. I'm sitting here eating buffalo wings. My 11-year-old sitting next to me. Brent, say hi to the people.
Hi. So what did I just delete here? Did I give this trade at some point in time? I think I did. Yeah. I did this in the dojo.
So if you're like a Coinbase noob, like what do you buy? Litecoin or Ethereum?
Yeah. So I didn't play this myself at the time, but I gave a signal in the dojo, like one reason, like that Litecoin was about to outperform Ethereum for a while, and that happened now. Apparently, I gotta admit I didn't really keep up with this chart. It's very simple, right? I just took that wick, was sitting there. I was probably looking at it more like on a daily chart. And I was watching this since here. I think I drew these boxes here, and then I saw that it was doing this like megaphone thing. Eventually, it hit like a higher time frame resistance, and then it just dropped like a rock. Like LTC underperformed so hard, and then it eventually reached this level, and this was where we're saying, okay, this looks good again. And now it hit that previous support, turned into resistance. So you could argue that was the move to be in. And I think that against Bitcoin, both Ethereum and Litecoin look very similar now in the lower time frame. Like they got that inverse head and shoulder thingy kind of structure going. Yeah, I'll just stay on this chart. But still, I gotta say that this just looks like a bull flag, right? So I think despite this rejection right here, there's definitely a case you could make for LTC continuing to perform against Ethereum again.
That's bullish.
It's not over. It's not over.
That's bullish. You might get one wick down into that little structure right there. So
I don't hold that much Ethereum at the moment, just like a little bit ammunition for Uniswap and to pay the fucking gas fees. And I am in a pretty sizable LTC trade. I haven't filled completely yet, but it's already pretty big.
So I want to make a quick point about pair trading in general, which if you're gonna do it almost exclusively, you have to use futures of some sort on at least one of the coins, right? Because you have to be able to long one, short the other. Something I've noticed, you said to drop some alpha, so here's some alpha I've noticed that I don't think sharing is going to hurt anything. Especially on alts, more like mid cap, like anything outside of the top 10 or 15. A lot of these have futures nowadays, and the funding is atrociously slow to catch up to the state of the market. So what that means is the asset could be really bearish and still and the funding still be way out of whack, right? So if
Acro
an asset
Acro was paying 0.5, I shorted the fuck out of that.
Yeah, like you see these ridiculous rates, and for whatever reason, I don't trade on Bybit, but like the Bybit rates are fucking god awful, or a godsend depending on how you want to trade them. But anyways, what that means is you can actually, depending on how you want to take your pair trades, you can either do it, with 2 futures contracts or one half of the trade be spot and the other half be a short on whatever pair trade you're looking at. You can extract an incredible amount of edge from strongly trending, not necessarily assets, but pairs, which often trend harder against each other than you'll see the actual assets trend. And just get get like an extra 1 to 2% edge for free a day just for holding the trade, depending on how you structure it and what you're looking at. So for people that haven't ever considered pair trading, and for anybody that doesn't know what that means, that would be like what he was talking about, Ethereum versus Litecoin. If you think Litecoin will outperform Ethereum, you can long Litecoin and short Ethereum in equal amounts. And you make the difference while being somewhat more hedged to broader market movements. It's just a different pair, just like you would be trading, Bitcoin versus USD. But there's a lot of those opportunities that if you want to look for them, you can find really clean trends and get paid fuckloads of funding to trade them. And then if you want to
that's a serious gem that's going to go over like 90% of people's heads, by the way.
Yeah, that was.
I know
and
that.
I know. Like,
but like for the people that'll take advantage of it, it's. I hope you'll be able to do a lot with it. So I hope.
David, that goes over my head. I've been doing this for 4 years.
That's like David specializes in stuff like that, right? Like finding arbitrage and value in like hedged trades, like delta neutral trades, stuff like that. You've been like, I'm also kind of a noob at that. I know that you've been very successful doing that.
Dude, I've made stupid amounts of money doing it, and what's weird about it is I'm fucking stupid. Like genuinely, there are so many people that like I know that just run circles around me.
You're not stupid. Stop it. You're gonna give stupid people false hopes. Okay. you're not.
Thanks, man.
You're average. But
fair enough. Perfect.
You're average.
Let's go with solid midway.
I mean, David. I think I threw the bell curve mean like twice at you. So,
dude, that was fucking great. I love it.
Yeah.
But yeah. Anyway,
can you pull up Tezos?
Let him finish dropping the alpha, please, before we go to Tezos.
I mean, that's pretty much it. But like, what I'm saying is like,
I'll bring it up.
Like, the people who are really good at this are the guys that like have automated systems and bots scanning for opportunities and funding spikes and volatility correlations and all this different stuff. And like, while I'm smart enough to kind of read, to find the stuff to read about it and then figure out what they mean, like there's so many people like that can just run circles around me in this sort of thing. And so the fact that like knowing that I'm severely outclassed in this and I'm still able to make stupid money doing it is ridiculous to me. It just shows me just like how little, like how basic this market actually is. Like this is still a very, very, very young market. The fact that we're seeing just even stuff as stupid, simple as like basis trades. Like what was it? I think I posted like Ethereum had a 1-year futures or at the time it was like 10-month futures contract premium of like 24%. That's literally free fucking money. And the fact that people are just letting that go, like that hasn't been eaten into very much, just means like this market is so young, and there is so much opportunity for people that want to jump in and learn. And it doesn't have to be like this delta neutral funding based shit that I do, but like, you know, like you can find so much opportunity here, and the people
that's actually a big one.
Yeah, it's
like the long-term futures. Like when the market gets really dumpy and bearish and people get scared, they get such a discount on those.
But it's an excellent point to the root of it, and I think that people make this way more complicated than it really is, and that's where they get screwed. I mean, the rules are simple.
I'm super guilty of that.
More
yeah,
like.
So Jake, I brought up Tezos for you too.
Oh, thank you. All right.
I'm gonna shut up. Mostly.
No, you're good. No.
So I'll be back. I'll be back shortly. I actually have to piss. So. and get more whiskey.
I gotta get more whiskey too. But yeah, like you can kind of ignore these fibs. I think I drew them at a time when I wasn't as adept at doing that. I mean, they kind of work.
So I'll be transparent. Tezos is something that was completely off my radar for a very long time, and thank God for that, because you would have lost a tremendous amount of opportunity cost if you were just bag holding Tezos for the last 6 months. However,
trying to like catch the dip, like knife catch that would have been deadly.
Yeah,
I'm sure none of us here know anybody bag holding Tezos.
So
by
that I mean I'm bag holding Tezos.
Condolences. But like you might find some redemption soon.
Yeah, that's my thoughts. I think and originally this was purely a sentiment trade. Purely sentiment. However, like I don't just like get sentiment and then press the green button. I have to I have to look at the chart obviously. And when I looked at the BTC pairing as well as USD, but mainly the BTC pairing, like the potential for like a serious breakout is definitely there. And then, the sentiment for me was very, very strong on this one. So I was looking to get in. If you look at where it went on BTC pairing, like it basically went below like the level that nobody, this is very similar to H-bar actually. So H-bar had like a little wave, and then it like did like a 20x or something, or 15x, whatever, like in 2019, and then it just dumped all the way. It dumped for a year straight and then went below that level. And that was like your opportunity of maximum upside. It was kind of around the time where I did the H-bar good, bad, and pumpy video, because I felt like, hey, I don't think this project is going away. The fundamentals are strong, and I think it's actually mispriced in relationship to other coins of its stature. And Tezos, was everybody's favorite for a long time, and I actually kind of called the bottom on that move too. Like part of what we like to do is I don't want to bag hold something and wait like a year for it to do well. I like to try to get in and at a point where it can move quickly. And if it doesn't, then I'll get out. And sometimes I have missed trades like that by being too impatient. But when I looked at that and I see kind of like what H-bar did, and then I compare the fundamentals of Tezos, like, yeah, I know people are down on it. That's all I see is people being down on it everywhere. So that means that a lot of people probably did sell in this range and allowed a market maker to kind of corner the market. And once that happens, that's when the markup happens. And as it pumps out of this, you're going to have the people that have been bag holding for 6 months sell at like a 20%. Like, oh shit, it finally pumped. I'm selling now. And it's going to blow their fucking face off. So I think that the time is coming. I think it's very close. And if you look at what it's doing on the hourly, especially on USD, I mean, we now have, it made a really nasty bear flag that ended up bottoming out, comes back with the dolly yesterday. I bought there. You got a dip today, which I also bought. You get the breakout off the stop run. So you have like basically, if you pull up the hourly, I wish I had the chart in front of me, but that was a scary moment. At the same time, BTC and stocks were dumping. So that's where I bought more Tezos. I bought some more BTC leveraged, and I bought some stock call options. And it was a really scary moment, but I felt like when that much fear is injected into the market, especially in a bull market, like you just keep buying the dip until it doesn't work. And you don't have to play it like as if it's the bottom, like, hey, I'm going to buy now, I'm going to hold for like a 10x or whatever. You buy it and you manage your risk and you take some profit and protect yourself. And now I have free trades. So now I can shoot for bigger upside. But what I was seeing, and if you could pull up the hourly, I don't know if you have the 60-day MA there, but it was acting as pretty clear resistance. There was a big rejection off of it. And then as soon as it pumped through it, it made another high. And now we've just retested it. And if you look at the candle, like it closed literally right above it. That's when I pinged everybody and said, hey, I think this is going to bounce like pretty soon. And if you look at the hourly that's putting in right now, it's quite strong. And the implications of breaking above like 38.65 or something is, in my opinion, a break of $4 is coming. So, that's what I'm watching for on Tezos. And if the BTC pairing actually has resistance in the 800s. It hit it again. And you could see that there are like 3 or 4 wicks up there that have been rejected. Eventually it's going to get through there. And when that happens, I think that's when you really see it kind of pop off. It's being suppressed. The market maker is fucking taking all your Tezos, and when they're ready to go, it's going to go and it's not going to stop. So, I think it's a nice high cap trade that you can make. So, and the upside and the way to structure your risk is pretty simple. I think you want to buy.
I think I'm liking this even more than LTC, because it's liquid enough basically for like most account sizes, unless like an ultra whale. Then maybe like LTC is better. Like it surely is. And I think the upside on this one could be greater. I actually followed all you said, like on my chart. I put up that EMA and saw how it rejected, basically getting back down to like 360, bouncing from there and doing that dollar thing on the hourly or the tuning fork, and now flipping the EMA and bouncing from it. Looks very bullish. I agree.
And you look at those hourlies that retested, like if you just if you erase that white candle and just look at those hourlies, you can imagine that would be very scary for somebody.
Oh yeah.
So I think the emotions of that move injects enough fear that this now breaks out and crosses $4.
And that's basically where there's like a lot of air. You got all that. I mean, if I go to a higher time frame, like I think even the 4 hour is enough. But if I go to like the daily, it'll be basically one straight line. Yeah, that was what I was expecting. So price really likes to fill these inefficiencies. You can think of those similar to you think about gaps on stocks charts. This put in like no volume traded here, was just super quick downwards. So there's basically a vacuum, and price likes to fill that, and it likes to actually go back up there and find out if these sellers, like if these sellers are still interested in selling when it comes back up, basically. And the thing in the middle, that's basically, it's almost non-existent. So that's a way you can think about that price action like that. Like if it managed to break this is important, right? It needs to get, like Jake said, needs to get about 4, and then there's the potential of a very, very swift move.
Yeah. Yeah, so we'll see. But it's making us, it's picking up steam.
Yeah.
I would love to hear Quantum about. Is he here? Quantum.
Yeah.
Yeah, Quantum's
Quantum
in
is
there.
in the chat. I don't want to put you on the spot.
So Quantum, he called
You're
the F fractal on Tezos, like basically the top. He was one of the people that foresaw like a horrible move for Tezos.
Hi.
It was really good, man. So I gave you props for that yesterday, I think, or the day before when I saw it. I was like,
appreciate
if
it,
Quantum
man.
called the top, I'm going to get the bottom.
Yeah. Well, we'll see.
And that was all he wrote.
Wait, sorry, I didn't hear what was asked.
No, just as Zavi was just since we were talking about that Tezos chart, like the BTC pairing and then the USD pairing. Zavi was just curious what you are thinking about it since you forecasted the move down so well. If you think that it and I think on the BTC pairing, following the logic that you like to follow, about that, yeah, like, you know, price swings evening themselves out with like over extensions and under extensions. I think you could argue that this is like a yin and yang kind of thing, right? With it doing like sweeping the Binance listing lows.
Yeah, I have quite a bit of information on Tezos. I had it fully mapped out. Essentially, if it was to follow the kind of the FBTC fractal of 2017, then you're going to break the all-time high on Tezos BTC. And the thing is, like, do the fundamentals correlate to even make that reality possible? Does the market cycle and the amount of time that is left on the altcoin dominance allow that to happen? I mean, there's so many factors now that are not like, oftentimes when you have a fractal duplicate, at some point that fractal starts to mutate, and at some point it may not even be recognizable anymore. And it's like, I do think that, okay, me personally, I don't think that that's possible anymore. I don't see the FBTC fractal continuing with Tezos BTC making a new all-time high. Do I think that there's a good case for a potential bounce here? Yeah, probably. But like, to break the all-time high would imply Tezos on BTC pair. It would imply like a Tezos price of like probably like 40 or something, or like 30, 40. I just, again, I mean, I also do a lot of order book analysis. And when I look at the books on Tezos, there's nothing but major sellers. And that doesn't mean that it doesn't have to move. But in my experience, generally, whenever I see an order book that looks like there's a whale sitting on the book, he's either accumulating or he's suppressing price, or there's a lot of bag holders. And so Tezos, if you look at the Binance order books on the BTC and USD pairing, I mean, it looks just as shitty as the macro chart. But we'll see. I mean, if this starts to perk up like the FBTC fractal, you're not going to miss it. You have time. And I mean, if it's really going to do something like that monstrous, you're not going to miss it. You're going to have like weeks and weeks of like, you know, entry zones that come up over and over again. So right now, like, I'm hyper cautious, and I'm aware of like my flaws. Like, sometimes I get hyper cautious and like, you know, in equities channel, and I'll kind of jump the gun sometimes and start to you know, but that hyper cautiousness also saves me. But at times it makes me miss opportunity. But yeah, so I think that for me, I've kind of backed away from Tezos completely. I think we're at the stage of the cycle where, and this is all in accordance to the macro analysis that I had put out a while ago, that I'm too focused right now on just Ethereum and BTC. I'm not too interested in anything else. That doesn't mean it's not going to move. So I'm not really helpful in this instance anymore.
Why Ethereum?
So
the USD pair breaking the all-time high, retesting the old all-time high level. And FBTC, I have a chart. I'm waiting for confirmation on FBTC. When FBTC gives me confirmation, there's about, I think, a good 70-80% move in the BTC pairing, which will suffice for me personally if it plays out. So I'm just waiting for confirmation at this point.
No, I completely agree with that. So
I'm bringing up the Ethereum USD chart here. That was what I was talking about, that both Litecoin and Ethereum put in that low time frame structure right now, and Ethereum happens to put it in on that all-time high retest from 2018, just so people on stream can follow.
So
sorry,
there's a couple things that you said that are really interesting. I have some thoughts on. So one of the things that you were talking about was you know, like a sort of weeks long entry zone, or you know, which is kind of the idea, like something you, or at least that I've heard / seen a lot on crypto Twitter or trading forums, or, you know, just something that's commonly accepted as quote wisdom, is that, you know, the best buying opportunities are, you know, don't last very long. And
in a sense, that is kind of true in that, like, the best price is usually the tip of a wick, right? Like, you're going to have a spike either in one direction, either, you know, that you want to sell or that you want to buy. And yeah, you know, that price point doesn't last very long. It's very, very quick. But those wicks or those moves are not what I would consider the best place or time to enter, because see, people like to talk about, you know, what was your R? What was your risk reward on that trade? You know, oh, you made 7 R. Holy shit, great trade, bro. And like, that's cool. Like, and there are some people that are really, really good at nailing precise tops and bottoms. And in certain scenarios, you know, I can be pretty good at that myself, but that's not really, that's not what I would consider to be the best form of trading, because the piece that a lot of people, I think most people, miss in the risk reward equation is that there's a third part, and that's probability or certainty. So sure, you can take a trade on a wick or on a massive spike down, and maybe you get a really good price if the market instantly reverses and never revisits that price. But how confident are you that that's actually what's going to happen? Because for me, I would rather see the market sort of, you know, spike off the low, and maybe it jumps 20, 30, depending on what the asset is, 50, even 100% to establish and show that there's actually more strength in the market. And then I can enter. Yeah, I'm not catching anything near the low. But it doesn't matter, because I can say, like, hey, if I'm trying to catch a low, maybe I have what, a 5-10% chance of catching the precise low within, you know, a couple bips, to make this massive RR trade. But, you know, 9 times out of 10, I'm going to lose the fucking trade. So is it better to take that trade and get this cool looking, you know, risk reward tool trade that I took on Twitter and look cool in front of my friends? Or is it better to let it bounce 20%, enter, and have, you know, a 70% chance, because now I'm riding an established confirmed trend, and, you know, maybe I only make 1R, 2R, maybe even only half an R, right? And yeah, that's not what you're going to show your friends on Twitter. Oh, look, look at my trade where I made, you know, 75% of my risk on it. But if you nail that trade, you know, 95% of the time, which one's really the better strategy, right?
And
So
you can also adjust your position sizing. You know, once you quote unquote paid for confirmation, that might also be where you would be willing to risk more of your stack on a trade, right?
Exactly. So yeah, like you can then decide, like, hey, I'm going balls to the wall. Yeah, I might be risking 10% of my portfolio. And to some people that, you know, that's lunacy, and to other people that's, you know, it's a bunch of idiots. That's you know, you're under leveraged, bro. But that it's really only that sort of being able to be that certain in a move or in a trend or what have you, that's, in my opinion, sustainable, especially as you start scaling size. Because, you know, I think scalping's overglorified, but it's really, really hard when you're trying to scalp in and out of the market with, you know, 7, 8 figures. And, you know, at least in crypto, you just can't do it with 9. You know, like 8 figures is fucking hard. 9 is impossible. And not that I have 9 figures to throw around and try it, but I mean, just look at the fucking order.
No, it was like $3.65, right? $3.65.
Right. No, they'll literally hunt you. Like, the market is not as big as people think it is.
Oh no, absolutely not, dude. Like, I have on several different occasions, and this is key, mostly in 2018 when I did some dumb shit when, you know, trying to enter a trade. There, I've inadvertently caused some moves on, you know, small moves. Don't get me wrong, you know, stuff that shows up on the 5, 10, or 15-minute chart, whatever. With on, you know, top 50 coins with way less capital than what I think most people would think it would take to do. You know, like, people really underestimate how hard it is to move money in and out of the market. And that's actually, I designed an entire fucking trading system around being able to get into and out of positions with minimal impact on price. Like that's something I spent a lot of my time thinking about and you know, implementing and tweaking and coming up with, because it actually is a massive concern once you start trading with any real significant size, compared to what the volume on a coin is. It gets fucking hard, bro. Like, if you don't believe me, go play. Well, I used to recommend Cryptopia, but you know, go play on some $10,000 market cap Uniswap coin. You know,
that's part of why it is cool to catch those wicks too. And like, if you do that, I think my suggestion would be like, you want to take like a speculative entry on that. You don't want to go full size on a knife catch, right? But if you're a speculator and you go with a responsible position size, and then you get your confirmation, then you're adding, you know, and you might be taking the same trade process that Dave's talking about right now, but you already have that entry, you know?
Right. So you guys have probably seen, like, I'm a huge advocate of stacking, at least in this market. I've been saying this for months. Stack bids. What's the average retrace in a Bitcoin bull market? Easy to quantify. Look, you know, it gets smaller and smaller and smaller every cycle. Last cycle, the average retrace was between like 25 and 35%. So, you know, the run before that, it was somewhere, you know, it was a lot more. There was a lot more variety.
Chris actually built a whole tool regarding that.
Don't give up all the alpha.
No, I think that's actually out for free for everybody to use, if I'm not mistaken.
Yeah, it's a public indicator.
It's so useful. Like, you nailed so many moves. Just, you know, fuck fibs, fuck, like, you know, drawing support resistance lines. You just do that average retrace and bid that, and you caught so many bottoms.
Very simple.
That was crazy. So yeah, great point.
Yeah, and you're bidding. Right. If you get your entry, great. You got a great entry. Maybe it nukes past your bids, you know, and that's why, like, I stack them anywhere between 10% below the market, which we get retraces like that like all the fucking time. And I have, you know, very small bids stacked at that level if I'm trying to add to a position in a trend. And, you know, it gradually increases in size as we go down, and eventually, you know, I have a stop loss or a place where I intend to start unwinding my position.
That's key.
So that, you know, yeah, you're never going to fill all your bids, and if you do, honestly, it's probably means you're fucked. But, you know, you buy into trends, you just get the entry that you can. It doesn't have to be perfect. It doesn't even have to be great. Just as long as it's at a discount from the general trend, you're doing good.
I'm a fan of like having laddered orders in a range, especially like when BTC is at 50K. You got to realize, like, you're not going to catch the low by like $50 or $10 or something. Like, it can happen, but you can't plan for that. You know what I'm saying? So like, to have like a range of maybe $200-$300 or even larger, and you're laddering orders in that area, looking for that to be a reversal point, like, that's cool. But the thing that people fuck up with is, like, they don't know how to position size properly. So like Dave said, like, you want your your orders to be getting progressively bigger as price gets closer to your last order. You don't want like evenly priced orders like in a range, because what'll happen is, if your last order fills, then your average price, you're going to be like hella underwater, like right away. You want like your last price to be your best price, and you want your stop to have some room. Like, you don't want to get filled on your last order and be like, fuck, it better bounce right now or I'm dead. If it's like that for you, you're not doing it right. Like, you need to have some room below your lowest order. And to do that properly, that means you have to actually be doing risk management, right? Like,
right. It actually takes some math, because you have to figure out, okay, where's my average going to be if all these bids hit? Like, always assume all of them are going to hit. Now, where does that leave my average entry? You know,
exactly.
Whether you do a little math or not.
That's it.
Right. And it surprises me how many people just are like, you know, that's too much work, bro. I'm just going to eyeball. It's like, no, you don't understand. This is your fucking life, dude. Like, if you're serious about this shit.
Yeah, do you think you're literally playing against Sam? You're playing against Sam and Arthur and Suzu and these people. Do you think they're just randomly doing
Jake, I'm glad you bring him up, because I wanted to mention that I think in 2019 there was a really, really good interview with Sam out there where he described the whole crypto market as basically just engineered liquidity. Like, he described all of price action.
I remember that.
That it's just
right on the money.
It's just whales engineering liquidity to enter and exit.
Was it him or Suzu? I thought Suzu said the same.
No, that was Sam. I remember, like, they were saying like outside in the garden, I think, like at some table.
Suzu said something similar with Luke Martin.
Well, that makes a lot of sense, because they be like, you know, both of them are basically taking all the gains from everybody, so it makes sense that they are following similar concepts.
And they're telling you what they're doing.
They're telling you,
But
yes, that
you
you
know,
are
like-
the fucking liquidity.
Yes. So in regards to laddering, because this is important, especially like if you want to use that tool as like even like a spot trader, it doesn't matter. Like you have to be okay with not being filled at full size, right? So like if you put orders up and you do it properly and it doesn't hit your low target, then you're not going to have a full size position. But here's the catch. You're going to be in profit, right? If your low orders don't get hit, then you made money. And that's like an outlook that I had to change personally that took me some time. And it's basically controlling your emotions and being okay with like not making a shitload of money all the time. You know, it sounds crazy because when you go on crypto Twitter, all you see is people making a shitload of money. You don't see the people that are losing it. You see the people that are making it. And you're like, fuck, I got to make like 100,000 today or I'm a piece of shit. But you don't see the guy who lost 100,000 and like got completely wiped out, right? So
yeah, and it's funny too because like I mean I'm not gonna disclose portfolio size or anything, but like I'd be willing to bet like I mean first of all everybody knows Twitter's got a lot of LARPs or people who play up to be trading with more than they think they have. I don't have a massive portfolio. I have what I would consider a decent sized portfolio, and I'd be willing to bet that what I consider decent size is probably more than what most people are trading with. But like I don't have 6-figure days in either direction. Like I would be willing to bet that I have a significantly larger portfolio than the majority of crypto Twitter, and I don't have these wild swings in my portfolio value. There's no reason to. Like the normalization of like, oh, he's up 6 figures today.
I
like,
lost $1 million last week. Like
I lost $1 million. It's like, okay, bro, you better be worth 50 or 60 million then, because if you're not, you're fucking up. Like you're just
like you're not going to make it. You won't make it
right.
long term if you're losing $1 million in a week. Like eventually, it's going to catch up to you.
Right. Like if you're having days that swing your portfolio by like I'm talking like on a normal market day where it moves, let's say like a slightly above average market day where it moves in some direction, it moves a total of 5-6%, right? That is actually higher than the average daily volatility, but not by a crazy amount. We see them regularly. If on days like that you're losing more than you're either losing or gaining without taking a whole bunch of positions, more than a couple percent of your portfolio, you're just over risk. That's just the fact of the matter. And on a long enough time frame, you will lose everything if you continue to trade like that. Maybe you've gotten lucky so far. Maybe, it's all worked out. Maybe you really are just the god-tier trader everybody wants to think they are. But most likely, you're getting lucky. Like luck has a huge amount. It's a huge factor. Like you have to get lucky to do really well.
Also market conditions, right? I mean, if those people are aware that the market conditions are what allows them to do that, then they're already in a better spot. But if it's just like luck that they they just happen to stumble upon the market conditions that allow them to do that, then they will get punished really, really quickly when that changes.
Yeah, for sure. And I think you guys all know Salsa Tequila, or at least know who he is. Like he talks about this fairly well, and I think he's. I mean, obviously,
a friend of one of our admins. Yeah.
Yeah, I mean, anybody that to use the mantra, keep clicking. Anybody that clicks that much is going to be very well aware of like how that kind of works. But he's one of the few that I've seen talk about it in like a very, very open and realistic way. It's like, look, dude, like I know when to press my advantage, but when I do, and then the market changes, I get fucked. And that's just true. That's just honest. That's how it works. It works for some people. That's not really the way I trade, but it's very valid for a lot of people. That have developed very specific edges designed for specific market conditions.
Yep, that's important. Very important stuff.
Agreed. Yeah, like Mikey had to bounce, so he'll come back and talk to us about equities and his thoughts on rates and all that some other day. But he's also somebody that I value very, very highly for being conservative and very, very opportunistic about the market and actually avoiding drawdowns and knowing when to scale risk back, which I think is a very, very underappreciated and also underthought undertaught skill.
Absolutely, dude. I'm gonna talk Mikey up behind his back. That dude is not what most people would think of as like when people think Wall Street or savvy equities trader, people don't people think of like some guy that's a CFA that's got all this training and knowledge about what the market should do, all these models, what the risk-free rate means, and all this other shit. And not to say that that's not important or useful, but that's not where Mikey came from, right? Mikey came from like, hey, I'm going to spot trends and I'm going to get really, really good at allocating and managing risk and making sure, first of all, I stay in the game. And second of all, that I have some exposure to potential upside if I think that upside outweighs the potential downside. And just those things have enabled him to do so much better than check hedge fund returns, right? He's beating all of them.
Yeah.
And
easily.
he doesn't have he has none of the experience.
Especially if he's trading for his dad, like he's even better than on his own account, and it's already great on his own account.
Yeah, because he's even more risk averse. He's risk averse, and while still looking for potential upside, and that's really the name of the game. It's longevity. It's all about longevity, and that applies to any market. Really, you got to be able to stay in the game, and like any minimal upside you can capture on over a large enough sample size, like any little amount of positive expected value, you stay at the game. You take as many opportunities that have a positive expected value, no matter how small, that you can find, and you can't help but make money. Like it's a guarantee. That's how math works. And he's one of the very few people that I've come across that just intuitively gets that. And because of that, he's just able to kill it.
Agreed. Absolutely. So
D-King, are you there?
Can he talk in here at the moment? Let me see if he has the role necessary to. I'll give him speaker real quick. Now it should work.
Probably should be up, by the way.
Yeah, for free. Like
no, it's awesome.
D-King's the guy who crushed it. Oh, sorry.
I'm very, very happy that we have you here tonight.
Yeah, man. I've never heard you talk actually, but really, I'm glad you joined. Good stuff for sure.
Thanks.
Dropping
Thanks
a
for
lot
having me, man.
a lot of knowledge, man. Yeah, you should come more often.
Obviously, I love this shit.
Yeah,
I'm down, man.
So D-King's the guy. He's crypto trader, but he's somebody that's really crushed it in options this year. Equities trader, and give us a good D-King. I don't know. Are you there? You there, D?
Yeah, I'm here.
Anything you want to talk about or comments you want to share?
Yeah, sure. I mean, I haven't really been trading crypto as much anymore, just because of time. Been so focused on options and takes up like 6-7 hours of my day at least. But it's been pretty choppy recently. Been doing for crypto, I've been doing maybe 2 active trades every couple weeks. That's pretty much it. And I set alerts on when to enter and exit. But for options, I think I love trading options because I feel personally it forces you to be a lot more accurate because you're playing against time at the end of the day, versus just holding spot shares or spot coins. But like you guys said earlier, and it's David, right? David's his name?
Yeah, it's David.
Okay, cool. Yeah, like David said earlier, it's all about risk management and being proactive about that, especially with options. You can easily blow up your account if you're not doing the right thing. But it's trading options that actually taught me a lot in terms of practicing better risk management. And yeah, I'm always going to be here.
Yeah, you put up that great post about your like challenge account that you grew so
sorry,
quickly.
I stepped away for a minute, but yes, I'm David. Hi.
Nice to meet you.
And I remember you got that dent in the growth curve, like a pretty significant one, over like 1 or 2 months in like this winter, where you said you basically stopped following your process, and that was what was immediately visible on your on the chart of your portfolio growth, right?
Yeah, it was crazy. I mean, I turned 700 into 63K from from August to October. And during the elections week, it was probably the worst time to trade. So I guess I was high off the euphoria of, having so much growth in my account. And I started day trading and scalping pretty much for 2 weeks straight during volatility. And I would open 10K positions on day trades. And I would set really tight stop losses. So I would probably get out for 5% losses. And those losses eventually added up, right? I would keep chasing the plays. I would keep getting back in. It was just a really bad time. And I learned a lot from that. And I looked at myself and I said, I am never doing this again. So November came. November was a great month for equities. I was hitting a lot of, pretty much 90% of the plays I was in were easily 100% or more profit. So I was able to bring it back from 13K. I went from 63 to 13. Brought it back from 13 back to 60 again. And then from there, I've just been practicing better risk management and just not making those stupid decisions again.
That's
sure.
I think you bring up a good point. You were in that spot where you didn't risk all on one trade, basically, but those like paper cuts, they can add up too. I experienced that too. Once in a while, like it's been a while since that occurred, and I think I'm getting better at avoiding it. But one of my psychological weaknesses is that I in like dumb scenarios, I tend to tunnel vision into lower time frames than I usually do, and then I start buying dips too early. Like if I have a bad day, basically. And then I just don't stop buying the dip, right? Like I'm sure that over their trading career people experience this too, where your stop loss hits and you immediately want to be in the trade again, which obviously makes no sense whatsoever. Like there's a reason that stop loss was there, and in like if you have bad form that day, you might not respect that reason anymore, and that can happen on a higher time frame too, right? That can in principle happen over a whole month and really add up. So yeah
For sure. And one of the things that I needed to work on, and I'm still working on it now because I find myself doing this sometimes even now, is just trying to walk away, right? Like if you have a good day, or even if you've taken some losses for the day, just walk away. Don't try to chase it in your next play, because those losses will add up, and if you're trading emotionally, it's going to ruin you at the end of the day.
Big time. I actually tried to do that with like when BTC was in the high 50s. I took a good amount of profit into stables, and I felt that I was drained and I was worn out by basically one full year of raging bull market, right? And I realized that I also needed kind of a break and stepping back, and I just did. And taking profit also made that relatively like easy on the psychological side, because the portfolio just didn't swing as much. As like David pointed out, the normalization of like giant portfolio swings, of like your portfolio swinging 30-40% in a week, which can happen in crypto if you're all in all the time. That's actually something that is very very retail, I'd say, and a little unorthodox for like established markets. So it's definitely something that I'm also trying to be self-aware of, that that's not normal, and it's also not necessary at all to be exposed to that volatility in your net worth and net worth your portfolio all the time. And it also lets you, get to a clearer state of mind to make decisions in the future, in my opinion.
Yo, real quick.
That's always been
real quick. Sorry. Are you guys in YouTube? Are you guys enjoying this stream? Because we got like 59 likes. Like, what the fuck is that? What is that?
That's like we're not charting altcoins enough, I think, at the moment.
That's pathetic. We're not doing the dancing monkeys.
Way too meta. It's way too meta.
59. Like you know how much alpha was shared already in trading psychology? Like 59 likes? Really? You guys are stingy. You're stingy.
I want 69. Give me 69
no,
right now.
No. It needs to be over.
I wasn't
100.
asking you. I wasn't asking for you for to 69.
Listen,
Jesus,
motherfucker. I'll throw you right off this shit, David. I don't care.
Wow.
I'll throw
I
you
would
right
too,
the
though,
fuck
to be
out of here.
honest, so.
You're not going to play me in front of my son, okay?
Okay, that's fair. That's fair. My apologies. I didn't mean no disrespect, boss. Didn't mean no disrespect.
David, you were about to say something else. Like you were about to reply to my comment, right?
Yeah.
Okay. Jake definitely managed to throw you off. All right, we can move on to charting altcoins for the Moon Boys. I have no issue doing that.
I can tell you something. I can tell you Luna will go to the price. To the like, if there is 100 likes, Luna will go to $100. But that's what I can say.
Yeah, and Xavi's usually right when he talks about stuff like that. Like he knows his shit coins. So.
I actually want to pick your guys' mind about shitcoins.
I bought Luna here, and then I sold it somewhere here, and that's the end of my Luna story, and I'm very, very sad. Extremely sad.
Damn, we've all got those.
Yeah, like I never got back in. Like that's something, where in the bull market FA can be really useful if it's even just for the fact that there will be like a sufficient amount of projects that are FA sound enough basically, so you can get excited about them. And actually I was pretty excited about Terra. And I kind of forgot about it in the meantime. I just didn't load back up again because I wasn't focused enough on that, and I realized that since I've been charting more and learning more TA, that the FA got kind of a backseat, and I do that less frequently than I used to. Obviously, I think the overall benefits outweigh, like especially over a high time frame, like David pointed out, for example, like understanding risk management and knowing how to chart and how to execute on what you find. That over my whole life, that'll be more important than doing FA on shitcoin ABC. But I definitely realized that somebody who had more conviction in Terra because he was like really deep into it, he definitely would have loaded back up somewhere in here in this accumulation range, right? So I realized that was kind of a big mistake. And Xavi actually managed to find that balance, I think, because he went straight from mirror. Like Xavi had that big run on also on a smaller account that he was trading, where he went from some shitcoin ICO to Mirror to Luna, and then he wrote this, and it was pretty crazy.
Yeah, I entered Luna when we did a stream here like a month ago at 90 cents.
I remember that. Yeah, we did it together, right?
Yeah.
And it was actually, where is it? There.
A bit later, yeah, right here. Yeah. That red candle, the last red candle, that's the stream I brought it up here.
That's like you buying cut blood. Okay.
That's my candle. And I haven't TP'd, I only added on the way up.
Yeah, so be aware there's a fan angle coming up. Might want to set it. No, we just do this shit here for Luna.
Yeah.
Dude, just delete the fan. It's really simple.
It's super easy, right? But then like if I did that earlier, this wouldn't have held. So
well, you got to be selective about it. It's like the loom lines, man. Just put them on there when you want them, and then get rid of them when you don't. Like that's what you got.
That's a good point. I'm actually kind of a loom lines guy. Be like without realizing it, I'm actually into that stuff too. How he draws, I draw that way as well.
But I wanted to ask you, but both you and Hobby, because I respect you guys a lot as like FA guys, which is something that I pretty much suck at personally. How do you guys balance and please to keep this like interesting for the guys watching us on YouTube and everything, please like show us live examples on like your thought process and stuff. How do you guys balance the sort of the TA or just price analysis versus the fundamentals of an asset and decide, when to buy in, when not to, when to take some profits, when to buy back in, stuff like that? Because I ignore fundamentals literally completely. So, for example, I've made a shitload of money off of ETH in the past, like, I don't know, 6-8 months. Fundamentally, I think it's absolute dog shit garbage that should go to zero. I hate the asset. I hate that it exists. It's so crap. But
that's interesting.
But I mean, but it doesn't change the fact that
you are aware you are aware though that the literal future of France is built upon it, right? So
no, I'm aware that a very shitty clay model made by a toddler of the potential future of France may have been, molded out of Ethereum. But anyway, but like I just use that to illustrate but my fundamental opinion on an asset is completely divorced from my ability to trade it, because I don't consider that to be much of a relevant thing. And if I do, I trade it purely FA. And if I'm trying to gem hunt, it's like I find something that I like for whatever reason, I dump a couple percent of my net worth in it, and I don't trade it at all. I don't sell it until it's some preset multiple, usually based on just future market cap. And I'm like, okay, if it hits this point, I'm going to sell X amount, and if it hits this point, I'll sell X amount. But I don't actually try to trade it because I'm not looking at the supply and demand or the chart or anything like that. I'm just literally going either 100% off one or 100% off the other. And when I try to make those FA plays, usually they suck. I'm bad at it. I usually just lose money. So how do you guys balance that? And what would you tell somebody like me, or somebody who maybe has less experience with the more technical side of trading than I do? What do you guys recommend? Because I think you guys are some of the best I know at it. So
I think Xavi is very, very well prepared to answer that. I think he has a very, very nice blend of both sides.
Yeah, sure. I just say it blends very well together. I really consider both almost equal, and basically what blends it together, it's just trying to see trading as trying to anticipate people's behavior and what people will like and probably be hyped about, and trying to find this ticker or this asset when it's just basically disregarded and under the radar. And usually price action at this point will just be accumulation, or probably low volume and also low volatility in that case, and anything but a parabolic move, right? And if you find that project that you think can
Sorry.
on your
what was that?
Google, they keep censoring me in my own chat. I said
happened?
Koreans are the biggest scammers, and they deleted my message.
No.
you gotta be careful. You get banned, bro. I mean, YouTube's on that
alright.
shit right now.
All right, let me chill.
I'm kind of joking, but kind of not. Seriously, don't get your account banned.
I really didn't think that was bad. Koreans are the biggest scammers. I'm Korean. I can say
I guess Google doesn't know that.
Oh, does it ask people? Does it ask people in the chat to vote if it's a good dissent, something or racist or something? Like when you remember Periscope?
I think it's more likely to be a filter. I don't think that's
it's just an algo thing.
It's just machine learning. And apparently the machines think that Jake hates Koreans.
Okay, because on Periscope, when someone in this chat on Periscope says an insult, it asks everybody who's there watching if that's an insult.
Yeah.
That's
No,
actually
he was talking
bad.
about Fantom, the coin, and I was like, yeah, that's a Korean coin. He was like, is it good? I'm like, I don't know, kinda. Koreans are big scammers, but the reason I was kind of joking, but what I meant was Korean people, they're incredibly trusting to other Korean people, and that opens them up to being scammed. Did I ever tell you this? Did I ever tell you the story about my Uncle Andrew who bought tickets to go to Vegas from a random Korean guy? He didn't use. I was like, did you ever hear of websites like Orbitz or Excite.com? He's like, no, I just want to I know this guy from the church. that does travel. And like as soon as he said that, I said, I don't like the sound of this. And you know, he had this whole fucking trip planned out where he was gonna go to Vegas and, you know, do sightseeing and all these things. And like, you know, he showed up to the airport and there was nobody there. Like he literally got like I'm like, do you have the tickets? He's like, no, the guy's taking care of it. You know, we met him at church. It was a Korean guy. Like Korean people will do business with any other Korean person and ask no questions. If the person is not Korean, they're the most annoying. Like you don't want to do a business with Korean if you're not Korean, because they're be incredibly annoying and ask like a million questions. Like Korean people are very annoying to sell to, very annoying to do business to. But if you're a Korean, they just give you their money. So that's why I mean by like Koreans are big scammers, not like all Koreans. It's because Korean people are so like trusting to other Korean people that a small amount of like Korean scammers end up scamming the shit out of like the Korean community. It happens very often. So that's what I meant by that. So like, yeah, Fantom is all right. We have the chart up. Might as well look at it. I don't love that. From what I can see, it's not great, but it is in a bounce area. You probably get another bounce here, right? But ooh, looking at that resolution, that's not too pretty.
Yeah, I was, you know, I wasn't even liking the 4 hour here, and on the higher.
That watch that go lower, right to that yellow MA. So people are looking and they're like, we need a double bottom. Go back to that chart. Go back to that chart. I'll tell you right now what's going to happen with this guy.
4 hour.
Yeah. So like everybody's looking at the same chart.
So these MAs are not the usual. Like they're a bit all over the place right now. But
doesn't matter. They're looking at that low and they're like, it has to do a double bottom. Guess what? It's not. It's gonna go lower. It'll probably go to like a little higher. No, lower. Higher. Yep, lower. You see those two wicks right there? Like there's, and then it does a bull flag and then it breaks out. Like
this
right
one?
there. Higher. Above those, no, above that. It won't go that deep. If it goes that deep, it's real bad. It'll go like right there. That's like right around there. That's where you're long.
I have no idea where that was.
No, you had it.
I had it, but there was like lag. Let me.
Yeah, the bottom line is like people
This
are going to
one?
be looking for the double bottom. It's not going to hold, and they're all going to get bearish. As soon as it doesn't hold, they'll get bearish.
Yeah, I mean,
you'll get a little impulse move down, and then you'll get a good bounce. I don't think it makes it won't make another high, but it's going to bounce, and it'll be a really good trade, especially if you do leverage. But it's going to take that low out, like slightly. Yeah,
So you're talking right now about something that I actually use that I'm going to share with you guys that is actually just straight up alpha. I always think. So I use a very similar moving average band that I look at, not all the time or even most of the time, but you know when we're in sort of corrective structures like what we're looking at. Except I use volume weighted moving averages. And something that I have noticed and played many times, and if you guys have noticed, I've been almost scary accurate for the past, I don't know, 3 or 4 major retraces we've seen on Bitcoin and Ethereum on nailing the bottom or very close to it. And I'll tell you exactly what I'm looking at most of the time. So those volume weighting moving averages, right? And you don't have to add one. They're pretty close to the regular moving averages. They're just a representation of where the average, where of the average price point by volume over a certain period of time that the market has traded, right? So let's say we're looking at the daily chart and we have a 50 period volume weighted moving average. Well, the average transaction, like let's say it's measured in pennies, like the average penny will be, you average all pennies traded in the market and over the last 50 days, and the moving average will be exactly where the median of that transaction price. So a lot of times when we see like these sort of corrective structures or blow off tops, and when we see sort of pullback in the market, what'll happen is obviously we're way above the volume weighted moving average bands, and I use several of them to kind of give me a sort of range. And whether you realize this or not, markets always mean revert, even when they're trending, right? So if a market's trending up, eventually it's going to get ahead of itself. it's going to spike up, and then it's going to retrace. It's going to retrace hard. And a lot of times that retrace will pull it back to a little bit below that average volume over several different time periods. You can get a pretty narrow band. When it spikes below that band, and you can almost throw any sort of standard length, 50, 100, 200, 150, whatever, 20 period moving average. When it spikes below that band, there's a very, very high chance, if the market is trending, that it will mean revert and go back to either the center or, more likely, slightly above that band. So when you see the market kind of retrace, spike below the average transacted price by volume over a certain period of time, that's usually a very good buy, because you're going to mean revert a trend, right? So if on average people are buying higher and higher and higher and higher and higher, and then we dip below that average, if the market is actually still bullish, it should be a no-brainer buy, right? Mm-hmm. If the market's not bullish, then you get fucked, but that's what a stop loss is for, right? So you put a stop loss, and you can measure that by some kind of volatility. I like using ATR multiples to determine stop loss placement for trades like this. But it is a very, very, very high probability trade, and the same thing works in reverse in the bear market. If we have a pop up that pops above the volume weighted moving average bands, then you can sell that and you can mean revert the trend, and that's usually where you just get fantastic entries as well. Those are good places to stack bids, like we were talking about earlier, to get good entries, and you just move those bids up or the asks down depending on what kind of a market we're in, so that eventually when that sort of thing happens, you get a good entry with the trend. And it's stupid simple, but it's really profitable, and it's really easy to do.
Yeah.
So,
what MA is that, Stillman? See, that's basically
the 21 here. Yeah.
That's the area that I'm looking at, and also
I tried to find something. I tried to find something that illustrates what David was talking about, where it like dips below at MA. Also, because people are watching these MAs, like they're not super scarce. That's actually part of the like engineered liquidity that Sam and Suzu need to get rich off of you. And if you are aware of that, you can use that to your advantage.
Dude, look. You see that pump wick with the big volume? Look at the top of that. Draw a ray from that. Before this high, like there's a accumulation wave and there's a big pump wick.
It sits right there.
Yeah. Draw a ray and see where that goes.
Yeah, I did it right.
Yeah, and then if you look at like where I was talking about, look, the MA the moving average is right there. I'm curious, like on the other resolution where I was looking at, like that's like basically the area, right? That's your area.
So
that's your. This is not going to give you your double bottom. You're not getting your double bottom here.
And move stop you out to the daily. There you go. There you got it.
Yeah, that's where I was saying. That's like exactly where I was saying. Yep. That makes sense to me.
And that also kind of fits. Like this is like daily time frame right now, and that kind of fits what David was trying to.
So you could ladder. Yeah, he was dropping some real alpha there.
Yeah.
But like me, I trade like more so than these indicators, which I really like. So I think it's kind of lazy of me to like not utilize these more, and it's ego and it's laziness, because it's extra edge. Why not get better at that? And it's not something I'm a trader where like I've traded 1 minute for so many fucking hours that now like I have like a decent sense for like what price does when I see it on any time frame. And I kind of rely on that a little bit too much, I think. And to take my trading to the next level, I need to start to kind of add stuff like this to my tool belt. And I am. But
So my thoughts on that, I mean, you and I have been friends and mutuals for long enough that you probably remember, even when I was posting charts every other fucking day, I never really had a bunch of indicators on it. I was always kind of closer to like the pure price action type of guy, with some boxes and lines. But I've, over the past, I want to say like year and a half in particular, I've kind of gotten more experimental with sort of the things I'm learning and trying to trade in new and different ways. And the thing that I realized is that, this sounds stupid obvious, but I think a lot of people don't think about it like this. It's literally all just data feeds, right? You have time, price, and volume. That's all that matters. Every indicator is
Everything is a
mathematical formula.
Yeah.
Yeah, of that. Now you can add stuff like funding, like basis, like order book depth. So there are like sort of
just additional data points. Additional data
Right.
points.
So the key for indicators is to determine, first of all, what data do I want? Like, what do I want to know about this market? What's important to me? And that's gonna vary based on the individual, based on how they want to trade, right? So once you decide what you want, then you just find out what indicator or what data feed. It might just be a running ticker of a number, like what's the ATR for the past 30 days? That might just be a ticker. You might not even need to see the history of it. You just might want to know what it is right now. Find whatever that data that you want is, and then just find the best way to display it. That's literally all it is. That's all an indicator is. Don't add indicators for the sake of indicators or visuals. Think about it from the reverse. What data do I want? How do I display it that intuitively quickly makes sense so I have to spend the least amount of time thinking about how to interpret it?
And I mean, like the example you gave is a very good example of the point you're making right now, where obviously you are valuing volume as a data point. And that's why you gravitated towards employing volume-weighted moving averages instead of standard ones.
Exactly.
Right.
I value volume.
That's like a deliberate decision. That's not like random. That's not David didn't watch a YouTube video and saw somebody use that indicator, and then he thought, "Oh wow, I'm getting rich off of that." Like he made that decision in his head based on his preferences in terms of trading. So yeah.
And some of that
for me, I watch the 1 minute, and like the volume on the 1 minute is significant for me. There are setups that I take where the qualification or the prerequisite for me to take the trade on that setup is tied into what the volume is looking like on the 1 minute for me. So like I definitely pay attention to volume as well. And just before we move forward, or not move forward, but further elaborate, just one thing that I want to point out, or not point out, but mention. So like, let's say you're in the chat right now and you're one of the guys that were asking about Fantom. Like this may not work out, right? But like the two lines that Stillman draws, like if you're just putting one order, like you might not get filled, or you might get filled too high and get stopped out right away. Like that range that he's kind of drawing out between the low wick and that ray plus the MA, typically, like if that's really the level, especially if you're trading on like Binance perps, you're going to get some liquidation, slippage, whatnot. It'll probably go a little bit lower. So that's where like kind of laddering your orders, like we were discussing before, comes into play. So like this would be a range where you would want to ladder your orders. And then like, depending on what you get filled, like you want to have your stop a little bit lower. But you might try to catch it on the dot with one order and miss it. And like, ultimately you were right, but you were trying to be too precise and you missed the trade. So like something like that makes sense for me. Like you put a bunch of limit orders in that box, scaling larger as it goes down. And then you have your stop where you have to do math now. You have to calculate exactly what your average entry will be and how much will you be risking and figure out where your stop is. But I like that. I like that trade.
So you got to think about it like this, right? So the best opportunity comes at the worst cost, right? Because the best opportunity is the one that you actually get to partake in. So if you want to be guaranteed, if you think like longing an asset is a good opportunity, then the most positive EV thing you can possibly do is get exposure to that asset at any price. If you think it's going to go up, you need to own some immediately, regardless of price, right? That doesn't mean you need to own all of it, regardless of what the price is currently. The best price you can get is always going to be forced. And what I mean by that is it's going to be triggered by stop losses. It's going to be triggered by liquidations. It's going to be forced by people, at least in any kind of leveraged market. It's going to be forced by people that didn't intend to sell at that level. So they're being forced into a bad trade because of decisions they made ahead of time. Those are going to be your best prices, but it's not the same as the thing as the best opportunity. So by laddering bids, you get both the best opportunity by ensuring that you get an entry, even if it's not large. And, the lower you go, the better opportunity at a good price you get. So you end up getting, hopefully, the ideal mix of both opportunity and best price.
Very well framed.
Yeah, I agree with that. I ladder most of my entries 10, 20, 30, 40.
And there's a big difference between that and like just buying something that's going down, right?
Yeah.
Oh, yeah, you have to have a reason to think it's going to go up. Like you don't just buy.
Yes. Yes.
So like, hey, I got paid today. Time to throw my entire paycheck into crypto because fuck it, I don't know what I'm doing. Obviously, like there are people that do that, but they are not the people that are here 3 years from now. So.
Yeah.
Indeed.
All right, so we've been going for 90 minutes. I know we had technical difficulties, so it's really been more than 90 minutes. But
yeah,
I think the
an
people
hour
who stuck
44.
around got something. I think people got something out of this, and there's one major takeaway from this stream. If you get anything from this stream, just know that the less I talk and the less you see my face, the better the stream will be. So from now on, I think this is how we're just going to host it because I really enjoy this. I don't have any pressure on me, and we have banging guests crushing it. This is a lot of fun. A lot of fun. It's a great stream. I'm really enjoying this.
Yeah, me too. Absolutely.
So
I wanted before closing out, I wanted to ask Zabi if we maybe cut that part a bit short, where like, and also David, because David was asking the question about fundamentals and charting, and I feel like we got sidetracked from that pretty quickly. Or do you think that was sufficient, Zabi? What are you saying?
I don't know what I could add to what I already said.
Okay.
I think people understood, the gist of it.
I just wanted to make sure that we didn't cut short on that.
No, the real question: can we close the stream without talking about AMP, sir?
Sir, AMP is it the future of payments? Like,
is it in a bear market? Did it lose 55% and is now in a bear market?
That's a very, very good question. I think some people on crypto YouTube would think that that's the case.
I think the Korean AMP is better.
Korean AMP
might be better. It's definitely got more juice. But then it also got like Do Kwon, who really wants to add to that fuel, which I think Flexar aren't that interested in at the moment. So I made this chart, and it's bouncing off of that, but like kind of trickling down. This is not bullish price action right here, but it has a last chance. I got I'm pretty adamant about how quadruple bottoms and quadruple tops don't really exist in my reality. So if this doesn't bounce here, I think the next time it will drop through and it will complete this like crash cycle kind of thing.
Like Fantom, describe with Fantom, right?
Yeah, a little bit similar to Fantom, and obviously like this is a Gemini chart, and Gemini went absolutely apeshit during this. The Uniswap chart doesn't look like this. Still, this is the dominant volume pairing still, and this is the price action we got to deal with. And I could totally see it fill this, like I talked about inefficiency earlier today, right? This is all kind of a gap. I mean, there's some structure here. So with the confluence of the GAN fan and another FIP here, I wouldn't be surprised to see this before it then can pump out of it eventually. I'm still macro bullish on it. I think it's, despite its high market cap, I still think it is massively undervalued by the market. And I think that maybe it'll even be new retail that is going to reprice it, and not like crypto, like not crypto veterans. Like everybody is fed up with that payment meme, and nobody believes it anymore. And then the product comes out that actually does it, and people are not there to actually, and are not prepared to actually see it for what it is. I mean, Luna obviously is like payments too, but that's not the reason why it pumps, right? Like it pumps because it keeps creating airdrops and new products, new very, very ingenious products, and they created very, very smart tokenomics that actually pump into like only up mode. I still think that payment wise Flexer can definitely compete with Luna for the like as like the Western counterpart.
Can you show the Luna chart in the meantime?
Yeah, I did that like for most of the stream actually, and I got good news for you because remember how I pointed out that there's this thing here, right? The fan angle coming up, but Luna BTC actually broke it. That's the wrong one. Luna BTC.
Luna doesn't care about your inefficiencies, right? No, Luna pumps harder than your vacuum is vacuuming.
Yeah, and I mean, like, so far, I actually respected that. You know, I mean, you saw my Luna charts. This box has been there for a while. At the bottom, when we made the stream, I didn't buy it because I'm a fucking idiot. But you know, this worked. Everything, like, this is just respecting every level. And the good news is for anything long Luna is it just broke that. I'm actually running out of GAN fans, so Luna is actually probably one of the most bullish assets in the market right now.
Stillman, can you put the GAN fan on Gather?
For sure. I actually have it, I think, on the Chartex chart, but let me do it here real quick.
Jesus, that's bullish.
Wow. I just want to bounce on your idea of AMP competing with Luna, and I think there is a case of them partnering.
Yeah, maybe. So this is not working. So I gotta switch that up. F divided by we add together. Is that, Chris, am I doing that right? Am I doing math? I'm doing math. Wow. No, but this sucks. I gotta move over to Chartex. This is like fucking stupid. Let me share the screen real quick. Change windows. Gather, and that's gathered against the dollar. So let me see if I can get this right the first time around. It doesn't always. Sometimes I need to go through iterations with this kind of stuff. But usually, nope. So the issue is that fan potentially got invalidated very quickly.
Oh, perfect timing. Boom, perfect timing.
No, I don't like that because it got invalidated here.
KJ, are you getting ready to meme perfect timing about Tezos right now? Because it's
Whoops.
So this might be the one.
Oh, perfect timing.
Yeah, the timing on the last stream. If the people here watched the live stream we did a few days ago, yesterday.
Yeah, like yesterday or 2 days ago.
Is that Tezos entry and that Luna entry? Oof, both up 25%.
What about the BTC too? that was like a $1,500 move too. They got a lot out of that last stream. They got a lot. There was a lot.
No. But you're a LARPer. You're a LARPer. Shut the fuck up.
So there's your GAN fan. Been respected pretty well, especially here.
Man, we can't see your. I can't see anything.
You don't?
And we just see a gather chart. That's
yeah. I don't
okay, now you can see it. Sorry, guys. I thought I was already switched over. So at least you couldn't see me like picking new places to draw it to fit my bias.
Yeah.
Which is actually not what happened. Like I actually got a system for this, but
wow, look at the price action though. That's crazy. The wicks right there.
So this is basically, you know, it keeps getting like it tries to get above it, fakes out, it does like this bull trap, then structures below again, and then finally breaks it, retests it, and pumps. and it didn't quite reach the top angle, which is oftentimes like the target of a move. Like Messiah talked about this pretty frequently. Like he has been using GANFANs for way longer than I do. It's just something that I happened to see him use, which was very much in line how I chart, like, because I got this thing which I
look at that volume, by the way. I would be mindful of that volume because that was like pretty much a single entity. That wasn't like BitBoy Shield and like a bunch of plebs bought. That was like
that wasn't like a YouTube video, right? That was
one guy, like just like
what's up.
one guy being an ape. That's what that
Yeah.
was.
Yeah,
I watched it happen. It was one guy who just kept firing off 50 F buys, like over and over, with no catalyst known to the public.
I when we talked about it in like margin chat, when I said that this was like, you know, the pennant that you could exhibit in the Louvre, that was where I bought some, so I was happy at that move. It was just like picture perfect. You got that whole structure, and then it does this like perfect symmetry pennant right here. Like this had to just go up. There was no way that that pennant. I mean, pennants are usually like non-directional, right? Like to people in the stream, like they have like, I think statistically pretty close to 50-50 outcome, but they're very, very sensible to trends. So if a perfect pennant shows up in an uptrend, you actually can approach that with a bias that it's more likely to go up than go down. And that's where what David talked about earlier comes in, where you just find setups where you have like a calculable advantage in terms of the direction of your trade, and then you can take it with risk management, and eventually you will come out on top if the sample size gets high enough. So yeah, pennants and uptrend tend to break up, pennants and downtrend tend to break down. Right? Chris, would you subscribe to that?
Absolutely, 100%. I mean, patterns just show an end of a certain move in the beginning of another, but it doesn't really necessarily mean, you know, they're going to go up and down. Like I've seen bullish ascending triangles just break down completely. It just means the end of a particular consolidation or pattern. After that, you know, it really depends on the trend.
Yeah, I'm drawing like a triangle on those volume bars. You know, volume decreases over time, and then eventually it's ready again.
Yeah, I mean, patterns, most of them, I mean, obviously, like we're all familiar with different wedges and triangles and head and shoulders. And, you know, all of them come with volume analysis as well as just the general shape, which a lot of people, at least when they first start trading, are more interested in the shape than the volume, which is just incorrect. But like he was saying, they're all just representative of the same thing, right? They're all they're all some form of pause in the market, right? Any kind of pattern is a pause. You're not going to find a pattern that's like straight up or straight down isn't a fucking pattern, right? So whether it's a cup and handle isn't just like a U shape. You know, it has to have the handle. That's a pause, because in the U shape coming up from it, to get that actual handle, you have to have the little pullback, the little sideways drifting motion, right? Or you see a wedge, well, that's constricting. You know, the market stopped trending and started to constrict. You know, like name any pattern, it's literally some form of constriction. And like you said, it just means a decision point. And most patterns you're going to see mid trend. So you always want to trade the pattern with the trend. And if you know, for example, if you see a descending triangle or a descending wedge, in a bullish trend, I wouldn't short it personally. And now, I mean, yes, technically it's a bearish pattern, but it's in a bull trend. So for me, it's not worth the risk reward, because it's just a visualization of sort of a contraction in the market. And in a trending market, like you said, it more often breaks in the direction of continuation of the trend, whether up or down. And patterns work so well because they make it so mentally easy. right? So if anybody can look at a chart and go, oh, that's a wedge. I can see it. We've been finding patterns in way more random shit than that for millennia. Like we have constellations. None of that shit looks like a snake or Hercules or whatever the fuck. But like a triangle on a chart, everybody can see that. You can see it like, oh, and it's a good way for beginning traders to just quickly and easily visually identify, hey, something has changed in the market. And you always want to trade that with the trend. And if the pattern technically says that it should break in the direction of the opposite of the trend, my recommendation, at least to newer traders, until you have a larger, a lot more experience, would be just don't trade it. If it's indicating counter trend, just let it go. Just let it pass. And patterns, the other strength they have is allowing very clear invalidation levels. So, like you said, managing risk, being able to stay in. As long as you don't oversize, you won't be able to fuck yourself up too bad.
Good stuff.
All good points. I like one thing I want to add with, and maybe come at this from a different angle, is like, yeah, patterns are easily readable, and that's why they reproduce and people spot them, and then they become like some kind of like self-fulfilling prophecies. But on the other hand, they also are a visualization of data that represents human behavior, and human behavior seems to tend to gravitate towards like lining up that in a kind of mass behavior that creates these patterns. I know that a lot of people that do TA don't subscribe to that, and they think that like TA in a whole as a whole is just like self-fulfilling prophecies, and I don't believe that that's the case. And I think that how like a pennant forms, for example, how you got the highest volatility at the start, then it decreases over time, the volume decreases, and the volatility of each candle decreases over time. That's actually how the emotions in the market work at that point in time, and how less people are paying attention, less people are trading it because they are looking elsewhere, stuff like that. I think that's the other side of that.
Yeah, for sure. They allow, like you said, I like that you mentioned volatility, because I feel like volatility or proxies for it are so underutilized by technical traders, but also you get into mechanical trading, and a lot of the stuff that I've been talking about with the delta neutral strategies and funding strategies and stuff, volatility becomes more important there, and a lot of those strategies are automated and take note of it. But a lot of the traders you see on Twitter, it's not something they talk about regularly, and it's I don't want to say criminal, because obviously there are 1,000,001 ways to trade profitably, and everybody's got their own very system. But volatility proxies, and my favorite is ATR. I'm going to show the ATR because it's super easy to read. It's one of the simplest. Like I said, all indicators are derived from price, time, and volume, right? It's one of the simplest indicators to read. It looks just like any other oscillator. It looks kind of like the stochastic RSI. It goes up, it goes down, and it kind of sort of follows the market. You can kind of figure out that on strong moves it goes up, and on weak moves it goes down, or moving sideways it goes down. But some kind of volatility proxy is an easier visualization for, I think, most people, at least for me, to see the strength of a move, right? If you see like a breakout, like you see a breakout candle, we're breaking out of a range, and you might even see a decent volume, but is it enough volume? Is it a big enough spike? How do you quantify that? I don't know. Well, you see the volatility tick up as well as the volume, and all of a sudden it's like, hey, look, there's a notable difference. We didn't just break out of the range by the average move. We broke out of the range by 3 times the average move that we break. Right? All
What
of a
do I
sudden,
tell you guys?
it's a hell of a lot more important, right?
David
And
knows.
yeah, you can
knows.
see that technically on a candlestick chart, but sometimes it's, at least in my brain, it doesn't interpret quite as well. You can use volatility proxies for good stop placement. I think I mentioned that earlier in the stream a little bit, because you don't want to get wicked out for no reason if you can avoid it. You can use volatility proxies to compare different assets to find higher beta, well, now I'm getting too technical, but but like
that was good though. That was good though. Very good.
Yeah, but like there's just so many uses for it that even at a very basic or beginner level, I highly recommend everybody at least. First of all, I hate RSI and stochastic RSI. If I would recommend, like, a lot of new traders like those things, it's not bad, but try swapping out your RSI or stochastic RSI or whatever for an ATR. I'd be willing to bet it would help you read the strength of motions in the market.
Yeah, Cardi uses that a lot, and that's one of the indicators that he relies on.
I thought Cardi doesn't use any indicators.
No, he does, but not often. He prefers just playing levels. But when he does look at indicators, he
just hides it so he can trash talk me.
Yeah.
So I think David, like, in a more sophisticated manner, explained a trade that I tend to like to take a lot. Is when you see price form a very tight range, we'll just call it that, at a key level. So let's say you get a dump and then you're bouncing back and now you're at the neckline of the dump. And it starts to form this very tight range on the lower time frame. And the volume just goes down and down and down. And then ultimately what happens is you get a breakout in either direction. And if that volume breaks out and price breaks, I typically tend to go in whatever direction the volume goes. So if it's a breakdown, I will momentum short. I will short the first bounce I see. Now, if it's able to recover the range and then break out of it, then that was clearly a bear trap, and then I will have to long. But that's something I watch for. I watch when price is in a chop zone, regardless of time frame. Actually, it doesn't have to be on low time frame, but you're basically watching the volume leave the market, and that means that more and more participants are becoming disinterested or chopped up. And once the volume is like completely down, then that would imply that the actual move that is being prepared is about to happen. And once you see that volume start to break out, that will give you a sense. I've found that more often than not, you don't fade that first move. Obviously, you can follow your stops with it. If it reclaims that range in the other direction, then it could have been a fake out. That happens too. But more often than not, like, that breakout, especially if the volume is significant, usually leads to a way larger move in a completely different range. And that's something that I found success with.
For sure. So any tightening range like you're talking about it's with the constricting volume particularly, it means that, I mean, like you said, there's less interested participants that are, actively doing shit in that market. But it means that the longer we have a range like that, the more opportunity somebody or multiple somebodies has had to accumulate delta, a position on one or the other side of the market. It doesn't mean they have, and that's why sometimes we get ranges that are way longer and way less volatile than others, but they have the opportunity to, right? But the lower and lower and lower that volume gets, that means that those people may be filling those positions, right? Because if they're buying, eventually they're going to run out of money. If they're selling, eventually they're going to run out of coins, right? So they can't just keep holding one side of that range for forever, and their orders are going to get smaller and smaller until eventually they disappear. That's why we see less volume, because the people who want to fill an order on one side of the market or the other are, they're trading less. They've got their fills, they've got their orders. Now the question is, what's going to shove the market? And you get to one point, and I don't know, I wouldn't be able to find it now. Somebody, I think it might have been Simple Alpha, last year had a really good thread on how market makers handle those sorts of ranges. But eventually you hit one point where it's just too uncomfortable, even with the very small fluctuations that we're getting in those ranges, it's too uncomfortable to show bids or asks, depending on which side. And so then a small move can push the market more than it should. And then you start hitting stops, and then you start getting breakout traders. And then, more often than not, unless some very interested buyer or seller steps in on the opposite side of that move that's well capitalized, more often than not, you start a trend. So that's kind of the life cycle of these little ranges that you're talking about, or the consolidations. And I think it's important and helpful for everyone to kind of think about what's going on behind just the chart, because the chart's just, like I said, it's just another visual representation of time, price, and volume, right? But my opinion is that, like, to really kind of be able to get the most out of the market, you're not really looking at charts as much as they're just a form of data feed. You can get that data in other forms. It doesn't have to be candlestick charts. That was why we have Renko. That's why we have Heiken Ashi. I don't know if I even said that right. That's why we have, footprint charts, all this different stuff. You can get that visualization of data in a lot of different forms, but the key concept isn't whether you understand that, price is constricting in a range. It's whether you understand what's going on behind the scenes or what could be going on behind the scenes, so you know what to be looking for.
Big time. I agree.
I think on that note, let's wrap it up, man.
Yeah. We've been going for long enough.
It's enough. We said it
That
all.
That was great though. I enjoyed that a lot. David, thank you for coming on, and that was kind of a nice coincidence that we stumbled upon each other on Twitter tonight, just in time.
Yeah, dude. Thanks so much for having me on. And I'm sorry, personal flaw of mine, I tend to monopolize conversations, but I hope some of it was useful. So.
I think we struck a good balance because everybody on here isn't egomaniac anyways. So,
hey, at least I'm proud of it.
We kind of balance each other out, I think. So yeah, Jake, you want to take us home?
Have fun staying poor.
Road, take me home. Come on, everybody.
No, thanks for watching, guys. Appreciate the likes. Appreciate the guests. And David, a new member of the Roundtable. We got to do it again. I think
hey man, I am the round. That was what started this whole thing. So I started Roundtable not before the dojo, but before you started doing these roundtables, that's for damn sure. So that was the whole reason that I started commenting, and I even ended up here.
Really?
Oh, really? Like you're like circle of traders.
So that's your thing, like
table?
Roundtable.
Yeah,
I didn't even get that.
I don't know.
Wow.
So I run.
Chris was like, "What do we call it?" And he was like, "Fireside chat." And I'm like, "I like Roundtable more." So we chose Roundtable, but that's not.
I've always liked the concept. So yeah, I've got just a couple traders that I hang out with and talk with regularly, and that's
who do you talk to when you do this? So you have a YouTube? Do you have a YouTube?
I mean, I have a YouTube channel, but I haven't posted on it in a long time. I'm actually going to be doing some educational content this week, not on YouTube. I'm writing some articles right now.
Why did you wait?
There will be more YouTube content.
You clearly like to talk. I mean, why did you wait till now to do it? What do you
money? I mean, it ebbs and flows. So like writing, at least I organize my thoughts a little better. But especially on video, I tend to ramble, and I really need other people to like reel me in and or give me topics, because otherwise I'll just jump from like thought to thought to thought, and then none of it makes sense. So
I actually shared your reading list article, your older one. I shared that here in Dojo recently because I think it's just such a nice selection, and also you summarized so well why each book was interesting to read. I really enjoyed that.
Thanks, man. I appreciate it.
Yeah. So
okay.
So that's it. Enjoy, like, subscribe, and don't join the dojo because it's going to be closed soon. We don't need to do this anymore. And if you're bitching about the price, then you're too poor to join anyway. So I don't want to deal with it.
Have fun.
See ya. Later.
Bye-bye, guys.
Deuces.